Okay, chalo. I guess we have 22 students and we are good to go. So today what we're gonna do is we're gonna solve a few questions, a few tricky questions. Okay, we have like today we are going to look at 25 questions in fixed income, and after this, so I have divided the whole curriculum of fixed income into two parts. Okay, so today we are going to look at the readings from the first reading up to modified duration. From the first reading up to modified duration. From modified duration to the end, we're gonna look at it some other day. Okay. And also while solving questions, guys, we're gonna keep on revising the concepts as well. Am I clear?
Yes, sir. Yes, sir.
And I
Go.
want, yes. Good evening, Animesh. How are you?
Yes, sir. I'm good, sir.
Okay, chalo. Let me quickly share my screen with you. Just a moment. Okay, can everyone see the screen now?
Yes, sir.
Oh, 1 second. I'm so sorry. Just give me a moment. Yeah. ठीक है. So the first question, okay. Also, I'm going to teach you how do you look at question and how do you try and solve it during the examinations, during your exam. Okay. So your first question, that is, which of the following is least likely an affirmative covenant? Which of the following is least likely an affirmative covenant? Okay. Let me do one thing. Can I get a chat box here? A moment. Okay. So now, I have got people already giving me an answer. ठीक है. That's a very good thing. We need to understand also. We need to understand how do you solve questions in your CFA exam. Take it. Now there are two words which you need to focus on. Is first is least likely. Least likely. And second is affirmative covenant. Now, what do you mean by affirmative covenant? What do you mean by affirmative covenant is in very simple language. In very simple language. Agar aapne, if you have given a loan to someone, there will be some rules and regulations the other person has to follow. Do you guys agree? If you have given a loan to someone, there are going to be some rules and regulations on the borrower. Yes or no? Do you guys agree?
Yes, sir.
So those rules and regulations are known as covenants. Those rules and regulations are known as covenants. Affirmative rules and regulations are the rules and regulations the borrower has to follow, and negative covenants are the rules and the rules or what do you say, or you can say behavior the borrower cannot do. Okay, so now out of these three options, the issuer must comply with all rules and regulations. What do you think, this would be affirmative or negative? What do you think, this would be affirmative or negative? This would be affirmative. This would be affirmative. Okay. Second one, the issuance of new debt must be junior to existing bondholder debt. Okay. Now, I'm not very sure if this is something that the borrower cannot do. Let me look at the third option also. New debt obligations are treated as the same. Is this part of the affirmative covenant only? Is this part of the affirmative covenant only? Let me see how's your revision going, guys. Which affirmative covenant is this one? New debt obligations are treated the same.
The pari passu.
The pari passu.
Pari
Look,
passu.
too good. Too good, guys. I think your preparation is going, mine, it's going very well. Okay? So the correct answer will be B. Is that clear, guys? You need to read all the options and then you need to like that is how your confidence keeps on building on. Okay. Second, let me go to the second one. A 3-year treasury note is best classified as what? A 3-year treasury note is best classified as what? Okay.
B.
First, what do you mean by treasury note, guys? Treasury note is basically a bond issued by the government. A bond issued by the government. Okay, it is a 3-year bond. Okay. Would this be an asset-backed security? Asset-backed securities are issued by whom? They are issued by SPV or SPE, Special Purpose Vehicle or Special Purpose Entity. Capital market security is maturity greater than 1 year. Money market security is maturity less than 1 year. Okay. So your correct answer would be, B. Is that clear? Is that clear for everyone?
Yes, sir.
Yes. We are starting with the easiest questions, and as we keep on moving forward, things might get a little tricky. Okay. Now next. Bonds issued in the euro bond market are most likely what? Are they denominated only in euros, in the form of registered bonds, issued within the jurisdiction of the issuer's home country? Wow, guys. I think Vyom, Vakar, Saurav, Harshil, Kashvi, Ayushi, too good, guys, too good. Okay, too good. Eurobond market, it is not necessary they are denominated only in euros. Okay, why do we have the term Eurobond? Because it was first invented, it was first invented in Europe. That's why. It's not necessary it's denominated only in euros. Issued within the jurisdiction of the issuer's home country. Which bonds are those? Are those domestic bonds, or are those foreign bonds, or are those domestic bonds?
Domestic.
So the correct answer would be again B. Too good, guys. Too good. I think I'm very optimistic about this batch, at least excelling it in your fixed income exam. Bonds issued in the United Kingdom by a US-based company denominated in British pounds most likely changes when? When US interest rates change, British interest rate change, yeah, both US and British interest rate changes. Vyom, Anusha, Kashvi, Vakar, Jishnu, hats off. Hats off. Okay. Tell me something. This bond, the pricing of this bond would be in which currency, guys? The pricing of this bond would be in which currency? British pounds?
Yes, sir.
How do you find the price of any bond? What do you require to find the price of any bond? Do you require the yield to maturity or the interest rate? Yes or no?
Yes, sir.
So naturally, the interest rate would be the British interest rate only. It won't be the US interest rate. Is that clear?
Yes.
Is that clear, guys? Make sense?
Yes, sir.
Any questions till now, guys? Any questions? What we will do is after every five questions, I want you guys, even if you have the slightest of doubt, please let me know, so that there's a high possibility your doubt might be someone else's doubt as well. Okay. Okay. The fifth question. If an issuer is required to retire a specified portion of the bond's principal each year, the bond is callable, is a step-up note, has a sinking fund note. I do not know why are we doing this revision lecture, because you guys are, you guys can give an exam, go and give an exam tomorrow itself. Too good, guys. Too good. What is the question asking you? You are asking your borrower to pay out some principal every year. Okay? To pay out some principal amount every year. That is known as a sinking fund provision. You are asking your borrower to have a fund so that he puts in money in that fund, that fund is used to pay out principal every year. Is that clear? I want to ask you guys a tricky question. In a sinking fund provision, what is the disadvantage though? What is the disadvantage to investors in a sinking fund provision?
So
What is the
risk.
reinvestment risk? Guys, you guys have made me very happy. Like, I think your preparation is going very well. Okay, your risk to investors is reinvest. अगर आपको पैसा जल्दी मिल गया, okay, there is a high possibility you might not get the same opportunity. Interest rates in the market have gone down. Okay, so you have a reinvestment risk. Perfect. Sixth one. A bond that allows the issuer to pay interest in the form of additional amounts of the existing bond issue rather than a cash payment is best described. Kashvi, have you solved all the questions? Is there any question that you are left with? Because you're the first one to reply always. Have you memorized those answers?
No, sir. But
The
I've
correct
solved all
answer
the
is,
portal
sorry?
I've solved all the portal questions.
Okay. So your LES portal, your LES portal prepares you, like, your LES portal puts you in so much of pressure that these questions seem to be easy then. Okay. So that's how LES portal works. A bond that allows the issuer to pay interest in the form of additional amounts rather than a cash payment is best described as payment in kind bond. I am not able to give out the coupon payment right now. Why don't I do something? I will add this to the principal amount. I will add this to the principal amount. Is that clear? Is that clear, guys? Step up coupon bond is your coupon rate keeps on increasing every year. Deferred coupon bond is if there's a 10-year bond, for the first 3 years, you might not get any coupon, but the principal won't change. In a payment in kind bond, if the issuer is not able to make the coupon payment, the issuer will add the coupon payment to the principal amount. Is that clear for everyone? Is that clear for everyone? Any questions till now, guys? Any questions till now? Anime, no, Animesh, even your answers are going correct also. There's not, like, you don't have to, there's no need for, it's okay, Animesh, if you're, like, it's okay, it does not matter.
Yes, sir. But I can see a very good level of preparation here.
I am shocked myself. Like, I think this is the first batch where people are replying instantly. Guys, I hope your other preparations are going as well as fixed income. Huh? ऐसा नहीं हो कि फिक्स्ड इनकम में 100 है, बाकी सब में आपको मार्क्स नहीं आ रहे हो, ठीक है? ओके, चलो नेक्स्ट. An analyst is concerned that a bond might be downgraded one category and become non-investment grade. The current rating of the bond is most likely what? What do you think? Too good, guys. Too good. The answer, like, triple B minus से नीचे आ जाओगे तो it can, what would be your answer? You would not first. What do you mean by what do you mean by investment grade bonds, guys? What do you mean by investment grade bonds? Can someone tell me? What do you mean by investment grade bonds?
Good credit rating, sir.
Yes, the best credit ratings, highly credible. Okay, so all these bonds, A minus, double B minus, triple B minus, they are all investment grade. They are all investment grade. I'm going to repeat it again. They are all investment grade. The question is asking you, एक credit rating नीचे आ जाओगे, A minus से एक नीचे आओगे, you will still remain investment grade. Double B minus से नीचे आओगे, you will still remain an investment grade. But triple B minus से नीचे आओगे, you won't be an investment grade bond. Is that clear? Is that clear, guys? चलो. callable and puttable bond prices with the same coupon rate will behave most like an option-free bond when their YTMs are respectively what? This is a little bit tricky question. Let me see who gets it correct. Callable and puttable bond prices with the same coupon rate, okay? When will they behave like an option-free bond? When their YTMs are respectively what? Kashvi, you
Yes.
know, you can actually leave the session also because this was the most trickiest question, I believe. Okay, Iraya, too good.
Sir, I couldn't get this one.
I will explain it to you. You know the answer, Animesh. The only problem is थोड़ा सा language लोग ने twist किया है. Okay. First, guys, I will explain you what is a callable bond. A callable bond is a bond which gives the company, the issuer, the option to call back the bond. To call back the bond. Okay. Can you guys tell me when will the company call back the bond, guys? When will the company call back the bond?
And the interest rates may be falling.
When interest rates are falling, so that they can issue new bonds at a higher price. Is that correct? When interest rates are falling, yes. Okay. If the callable bond ka coupon rate is 10%, if the callable bond ka coupon rate is 10%, okay, the company will call back the bond when the bond prices increase. When the bond prices increase. So when will the bond price increase? The coupon rate needs to be higher or the YTM needs to be higher? When will the bond price increase? When the coupon rate is higher or the YTM is higher? When the coupon rate is higher.
Yes, sir.
When the
Country.
when the coupon rate is higher. So basically in such a case, the company can maybe call back the bond. Yes, do you guys agree? Do you guys agree?
Yes,
So
sir.
that is a callable bond. But when does a callable bond act as an option-free bond? Matlab the company does not even have the chance to call back the bond. When the bond prices are falling lower. When the bond prices are falling lower, that means the call option is worthless. It is as if it is an option-free bond. So when will that happen? When the YTM is above the coupon rate. Does that make sense? For a callable bond. Does that make sense, guys?
Yes, sir.
Everyone. Okay. A callable bond is worthless when bond prices are falling. When bond prices are falling. And when will that happen? When the YTM is above the coupon rate. Is that clear? Is that clear for everyone? Similarly, can you tell me when is a puttable bond worthless or it acts as an option-free bond? When bond prices are increasing or bond prices are decreasing? When is it worthless?
When bond prices are increasing.
When bond prices are increasing. Okay, no investor will give back the bond. Okay, and when will bond prices increase? When your YTM is lower than the coupon rate. Is that clear, guys? So the correct answer is A. Understood? Everyone, all 36 students, are you guys clear with this question?
Yes, sir.
Okay, perfect. Chalo, let's move on. Next. An index tracking the Bloomberg Barclays Global Aggregate Index would most likely have what? Limited security selection? सौरभ ये तो आपने याद कर लियो पक्का.
C, sir. C.
वाला वैली एक्सपोर्ट में है.
Why C? I want the explanation of this. I don't want like can someone go on unmute and explain why would the answer be C? What is the logical reasoning behind C?
So one thing is clear that a fixed income index has a more bigger investable universe than an equity index. That is point number one. And second, this is a global aggregate index. So hence it will have a comprehensive exposure.
Too good, guys. मतलब ये इंडेक्स को पूरा फिक्स्ड इनकम मार्केट को दिखाना है. So will it only have limited security? It is not possible. It is not possible. Okay. It will also not have a modest turnover because turnover depends on it depends on how do you have NSE and BSE? How do you have not NSE and BSE? How do you have Nifty 50 index and Sensex? They have some rules and regulations. अगर आप उसमें meet करो, you are part of the index. If you do not meet, you are not part of the index. ठीक है, addition और subtraction होता है. So modest turnover भी नहीं होगा, modest turnover भी नहीं होगा. It would be comprehensive. मतलब it has to show you the overall health of the bond market. So very well done, Saurav. I think your explanation was bang on. ठीक है. See, mutual funds and ETFs that track the benchmark and often offer a comprehensive exposures to many fixed income markets with no active security selection, portfolio turnover, limited solely to either new issuance or issuance no longer meeting inclusion criteria. Now, guys, this Barclays Global Aggregate Index, it is a ETF. Huh? It is a ETF. It is tracking the benchmark. ठीक है, clear है? This was again one of the most difficult questions, but just remember one thing: by Bloomberg Barclays Global Aggregate Index, it has to show you the health of the bond market. The bond market is much, much, much bigger. Okay, so it has to have a comprehensive exposure to fixed income markets. Is this clear for everyone? Is this clear for everyone?
Yes, sir.
Yes, sir.
Okay, we are here to make things much easier so that we remember it during our exams. Chalo. A firm that increases the size of an existing bond issue with a price significantly. Let me finish the question, guys.
Sir, this is a very simple question. Like, you can automatically see B and C going out.
Too good. Animesh, this is what I wanted to hear from you guys. You private placement and distress debt तो होगा ही नहीं, तो आंसर क्या होगा? Reopening होगा. Clear है? What do you mean by private placement? Private placement is basically when bonds are issued only to to a certain
Institutional buyers.
institutional buyers. Distress debt is when when the company is almost in bankruptcy.
Yes, sir.
Close to bankruptcy. So the answer would, ये दो cross out हो जाएगा, answer would be A. Is that clear for everyone? This is how you need to play smart in your exam as well. Okay. Chalo, next. Repo rate. Repurchase agreement. Assume that today the current US 5-year treasury note trades at a price equal to the bond's face value of USD 50 million. The security buyer takes delivery of the US treasury note and pays the security seller 50 million. Assume a repo term of 45 days and 360 days in a year and a repo rate of 0.375%. If the buyer agrees to return the note 45 days from today, the repurchase price is closest to what? Okay, now you need to understand something. That in your repurchase agreement, first there's a purchase price. What do you mean by the purchase price is कि lender ने loan कितना दिया है? What is the loan amount? That is known as the purchase price. Loan amount plus the interest amount is known as the repurchase price. Am I clear? Am I clear, guys? I'm gonna repeat it again. Purchase price is the loan amount. Loan amount plus the interest is known as the repurchase price. Am I clear? Give me a yes or a no.
Yes, sir.
Loan amount कितना है इसमें? What is the loan amount? What is the loan amount? 50 million.
50 million.
Now you calculate interest. So 0.375% is for 360 days. Guys, remember one thing. आपको एग्जाम में जब भी ये परसेंटेज में दिया हुआ ना, you always assume it is annualized. It is always annualized. So 0.375% is for 360 days. तो 45 days का कितना होगा? Cross multiply and find it out. 0.375 is for 360. So 45 days का कितना? 45 days का कितना? So the answer would be 0.375 percentage multiplied by 45 divided by 360. Okay. What is the interest that you what is the interest that is coming, guys? What is the interest?
23,438.
23,437.5.
23,437.5.
Yes, sir.
So the correct answer, loan amount plus interest amount. The correct answer would be B. Is
I
that
just wanted
clear?
to check, इसमें usually there are some where we have a premium also, right? Where the loan,
Initial margin.
initial margin, sorry, correct, yeah, that's the right word. So where the loan amount goes below 50 million, and
तब
then
वो margin ले रहा है आपसे.
correct.
Correct.
So you divide it by 103,
Correct.
and that is the loan amount into
नहीं, तो
whatever
basic,
percentage.
okay. Basically, suppose, guys, let me change the question a little bit. Now, suppose I am the lender. Okay, I have a margin. I have an initial margin of 103%. Yes, Hiraya, I'll explain it to you. I have a margin of 103%. I have a margin of 103%. Now, first, whenever you have this question, the first thing you need to understand, collateral की value कितनी है? What is the value of collateral? Everyone, what is the value of collateral? Is it 50 million?
Yes.
Is it 50 million?
Yes, sir.
So whatever my margin is, मैं उसके सामने collateral की value लिख लूंगा. I'll write the collateral value. And how much loan am I willing to give out? How much loan am I willing to give out would be 100%, would be X. Can you cross multiply and find it out? Can you cross multiply and find it out? कितना होता है? So that would be 50 into 1 divided by 1.03. It would be 48.54 million. Is that clear?
Yes.
Is that clear for everyone?
Yes, sir.
If I tell you Animesh has a margin of 125%, he has a margin of 125%. So margin amount 125%, collateral value 50 million. So 100% कितना हुआ? That would be the loan amount given. Is that clear? Is that clear for everyone?
Yes, sir.
Okay. Now, Iraya was asking, what do you mean by haircut? In this case, Iraya, first and foremost, in this case, can you tell me, Iraya, what would be the loan given to the person or to the borrower? Quickly, what would be the loan given to the borrower in this case? Would it be 40? Would it be 40 million, Iraya? If the person has a margin of 125%, that would be 40 million as loan given, right? तो आपने सिक्योरिटी ली है 50 मिलियन की एज कोलैटरल, आपने लोन दिया है 40 मिलियन का. Okay, so can I say you have, can I say you like what is it, can I say you have taken an additional of 10 million, Iraya? Yes or no? Divided by the original collateral value, so that this is your haircut. Is that clear? Is that clear? 10 divided by 50 is, what is 10 divided by 50? It is 20% would be your haircut. Is that clear? In this question, what would be your haircut? It would be 0. Haircut is 0. Is this clear for everyone? What do you mean by haircut, guys? Is this clear for everyone? What do you mean by haircut? Let me quickly ask you one question. If the margin amount is, if your margin is 117%, calculate the loan given and calculate the haircut quickly. Collateral value is 50 million. Margin is 117%. Calculate the loan amount, calculate the haircut. करेक्ट है। सौरभ आप पूरा पूरा लिख लेते हो हम कैलकुलेटर में मिलियन।
Yes. So, 4,27,350,000.
Yes, sir.
सॉरी,
Yeah, I write the full thing.
427,354, 4.27.
427 350 something, right? That
Yes.
is your loan given. 42.735 million is the loan given. 42.735. What is the haircut then? Iraya, did you answer me what was the haircut? Let me check. Let me check your answer, Iraya.
So you asked haircut in percentage or absolute terms?
Haircut is always in percentage terms.
Acha, okay.
Correct, Iraya. Too good. It is 14.53%. Animesh, did you get the haircut?
Not yet, sir. So, sir, this we have to just add the interest component and then minus.
नहीं 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 नहीं.
Okay.
Collateral की value कितनी है Animesh? What is the value of collateral? Animesh, is it 50 million only?
So, yes, sir, 50 million.
And you have given a loan of how much?
4,27,000.
42 million होगा.
Yeah,
ठीक
42
है?
million. Yeah. Yes.
42,735. Okay. Now, so you have taken some additional. You have given some. You have given a. What do you say? What is the term? So you like basically you are keeping something as a safety, right, Animesh?
Yes. Yes, sir.
What amount have you kept to your safety?
So that will be like the 50 million minus this, right? For 42
Correct. 50 minus 42.735.
Okay, okay. And
How
that
much is that?
is a haircut, right?
That no, there's one more step. How much is this? 50 minus
Um,
42.735?
7,026,000.
726. Okay. This divided by the collateral value in percentage terms. So you will get the haircut in percentage terms. Okay.
Okay, got it. 14.52.
Got it?
Yeah, yes, sir. Yes, sir. Got it.
Is this clear for everyone? Is this clear for everyone, guys?
Yes, sir.
Okay, perfect. Chalo, next. In practice, which of the following applies as it relates to sovereign government financing? Taxpayers smooth consumption over time, saving expected future taxes today for future payment. Taxpayers from rational expectations that today's tax cut will result in future tax increases and pass on tax savings. Governments seek to minimize interest rate and rollover risk by distributing debt across maturities while issuing debt in regular predictable intervals. Kashvi, again, you're the first one to reply. Okay, Kashvi, but can you tell me why C? Like, I want to see if like you have not memorized the answers. Why
No.
would it be C?
So because government issues securities of different maturities, because if they only issue short-term securities, they are prone to rollover risk. So this one was the only one that made sense. And the A and B is related to Ricardian principle.
I wanted to hear this, Kashvi. Too good. Okay. So A and B is your Ricardian equivalence, which is only good in theory. And what does Ricardian equivalence say? That government can issue short term or longer term, it does not matter. Government can issue short term and longer term, or the specific word is debt management policy. Debt management policy is useless. That is what Ricardian equivalence says. But it has a few conditions. So the first two are those conditions. Okay. But in practical life, government will always seek to minimize interest rate and rollover risk by distributing. थोड़े long term भी करेंगे, थोड़े short term भी करेंगे. Am I clear? Am I clear, guys? Have you guys understood the question?
Yes, sir.
So first and foremost, how do you memorize this whole thing? Is first there's this word debt management policy. DMP. Debt management. What is debt management policy? Debt management policy is basically, should I issue short-term debt? Should I issue long-term debt? If I issue short-term, I will have rollover risk. If I issue longer term, I will have a higher cost. Okay, understood this? Understood the question, guys? Debt management policy is, should I issue shorter term? Should I issue longer term? Shorter term may I have rollover risk. Longer term may I have a higher cost. Okay, that is what debt management policy states. Now, Ricardian bhai comes in and tells that debt management policy is useless. Okay, and he gives a few, and there are a few conditions which he states. First condition is taxpayers smooth consumption over time, saving expected future tax. मतलब taxpayers already know that future में taxes are going to increase, so they'll start saving today. And that is why आप short term ले लो या long term लो, does not matter. Okay. Second is, all taxpayers have rational expectations. That is your second condition. Again, it's part of Ricardian equivalence only. But these 2 points are only good in theory. In practice, government will always seek the middle way. Ayushi, rollover risk means, suppose Ayushi, I have issued a loan, I have issued a bond for 2 years. Now, Ayushi, can you tell me, in 95% of the time, when do I pay the principal amount, Ayushi? When will I pay back the principal amount? I have issued a bond for 2 years at a 10% coupon rate. At a 10% coupon rate. When will I pay the principal amount? Ayushi? I will pay the principal amount at the end of maturity. That is at the end of second year. Now, what will happen at the end of second year is, I will issue one more 2-year bond with a 10% coupon rate. I will issue one more 2-year bond with a 10% coupon rate. So, नए bond से जो पैसा आएगा, I will pay back the previous bond holders. Is that so? I'm rolling over. My coupon rate is remaining constant. एक तरफ से पैसा आया, दूसरी तरफ पैसा दे दिया. Is that clear? That this is known as rollover, Ayushi. This is known as rollover. Okay, but rollover risk is, what if when I issue new bonds, there are no buyers only, so I have to pay the principal eventually. That is known as a rollover risk. Is that clear, Ayushi? Is this clear, Ayushi? What do you mean by rollover and what do you mean by rollover risk? Is everyone clear? What do you mean by rollover risk, guys?
Yes, sir.
Okay, chalo, next. A non-callable bond, fixed coupon, has a price of 106.0625 and a YTM of 2.8%. If the YTM were to instantly increase instantaneously by 80 basis point, 1 second, where is the
Answer C. C.
why, Animesh?
Because whenever YTM goes down, so the price always increases more than the like the stipulated amount. Like here it is 11%. So
Too good, guys. Too good. Okay. Yes, convexity.
convexity.
Correct,
Yes, sir.
Kashvi. Correct, Ayush. Okay. There are four relationships which is given to you in your specific reading. First relationship is, can you tell me what is the relationship between price and YTM quickly? Relationship between price and
Inverse.
YTM?
Inverse. Sir.
Inverse relationship. Second relationship is, for the same change in YTM, percentage increase is always greater than percentage decrease in the price of the bond. Am I clear? For the same change in the YTM. Okay. That means if YTM goes up by 1%, YTM goes down by 1%. Percentage increase in price of the bond will always be greater than percentage decrease in the price of the bond. Is the second relationship clear, guys? Is the second relationship clear?
Yes, sir.
Third relationship. Who remembers the third relationship? I'll tell you. Bonds with lower maturity or bonds with higher maturity, which are more volatile? Which bonds are more volatile? Bonds with lower
Higher
maturity
Higher,
or
higher,
bonds with higher
higher
maturity?
maturity, sir.
Higher maturity, because there's a lot of risk involved. Is that clear? Yes, Harshil. That is known as the maturity effect. Too good, Harshil. Too good. That is known as the maturity effect. That is, bonds with higher maturity are more volatile. And your fourth relationship was bonds with lower coupon rate or higher coupon rate, which are more volatile.
So low coupon.
Why low coupon, Saurav?
Sir, lower coupon, that is why because they so whenever there's a change in YTM, they will have a more or higher disproportionate change in price vis-a-vis a higher coupon bond. So let's say 2% or 5% का bond है. तो अगर 1% YTM 1% rate fall या increase हो रहा है, so the price of the 2% bond will be changed by a bigger margin.
करेक्ट. वो
Then the
प्रैक्टिक वो एकदम वो क्या बोल न्यूमेरिकली दैट कैन बी प्रूवन. बट आप ना लॉजिकली सोचो, लोअर कूपन में आपको जल्दी पैसा मिलता है या हायर कूपन में, सौरभ?
लोअर कूपन में आपको जल्दी पैसा मिलता है बिकॉज इट्स अ शॉर्ट
जल्दी
टर्म
पैसा
शॉर्ट ड्यूरेशन.
नहीं. सपोज दोनों 5 years है, सौरभ. एक
ओके.
है लो कूपन 5 years 5 year बॉन्ड, एक है 2% कूपन, एक है 10% कूपन. पैसा आपको कितना जल्दी मिल रहा है?
10% वाले में ना.
करेक्ट. तो 2% में आपका बहुत बड़ा अमाउंट लास्ट ईयर में मिलने वाला है. करेक्ट है.
करेक्ट.
तो इसीलिए दैट इज मच मोर वॉलेटाइल. इज दिस क्लियर?
ओके, गॉट इट.
अंडरस्टूड लॉजिक?
उसका मॉडिफाइड ड्यूरेशन भी ज्यादा.
मैकॉले ड्यूरेशन.
हाँ सर, या मैकॉलेज ड्यूरेशन विल बी आल्सो बी लोअर, राइट?
हायर.
नहीं, लोअर देन 2% बॉन्ड बिकॉज यू आर सेइंग
करेक्ट.
दैट इंटरेस्ट जल्दी मिल रहा है ना, सो इट इज रिकवरिंग फास्टर.
Macaulay duration would be lower for the higher coupon
हायर
rate.
कूपन बॉन्ड, करेक्ट.
Okay. So I guess yes, everyone has got this right. The answer is C. Okay, C is the correct answer. Now coming to the maturity effect. Exception to the maturity effect for which one? Exception क्या है? First and foremost, guys, what do you mean by maturity effect? Everyone, please type in what do you mean by maturity effect? What do you mean by maturity effect?
Sir, it means the bond is very volatile if its maturity rate is high.
Higher maturity, high volatile. Too good, Vyom. Higher maturity, high volatile.
Sir,
Okay,
answer
but
is
there's
A for this.
yes, there is an exception. There is an exception. Okay, which is very rare. The only shortcut I'll give you is just memorize this. Longer maturity bonds. Okay, if the coupon payments are small, if the coupon payments are small and trading at a discount, they can be less volatile. Am I clear? Am I clear, guys?
Yes.
There's this exception which unfortunately you will have to memorize only. Longer maturity bond making a small coupon payment, trading at a discount can be less volatile. Is this clear? Clear है सबको?
Yes.
Okay, remember not zero coupon, huh? Remember not zero coupon. There needs to be three conditions: higher maturity, lower coupon rate, and trading at a discount. Higher maturity, lower coupon rate, and trading at a discount. Clear है? All 26 students, are we clear with maturity effect? Exception, are we clear with maturity effect and exception to the maturity effect?
Yes, sir.
Okay, perfect. Chalo. Let's move on to the next question. An analyst is analyzing 3-year 2.25% annual coupon bond issued by the QWE company. The current bond yield to maturity is this. 3-year swap rate 1.84. The government spot rates are presented in the table. G spread क्या होगा ये केस में? What is G spread first? What do you mean by G spread, guys?
So it is the difference between the bond and the government
Swap,
security
yeah,
difference.
बॉन्ड का YTM कितना है?
2.707.
2.707.
And which government spot rate will you use?
3 year.
3 years.
3 year.
Similar maturity if you use to compare.
Correct. So what is the difference between 2.707 minus 1.904,
Yes.
0.80, which is 80 points.
which is 80
Okay.
basis points? Is that clear?
Yes, sir.
How many basis point is 1%, guys? How many basis point is
100.
1%?
100, sir.
100 basis point is 1%.
Sir, I have
Okay.
a doubt here, sir.
Yes.
Sometimes I get confused with the first rate that is given. Can you scroll up this one, sir? So,
The first rate which is always given, that is the coupon rate, remember.
okay, and the spread is always between the YTM and the spot rate, right?
Spread matlab difference. What do you mean by spread? Difference.
It's a difference, sir.
So
Got it.
G spread matlab difference between YTM of the bond and government YTM or the government spot rate.
Okay.
ठीक है? Now, next one is I spread. Again, spread. Spread means difference. Difference between what? What is I
The
spread? Difference between
coupon,
what?
right? Coupon and the spot rate, sir.
Coupon नहीं आएगा. I spread is basically Animesh, bond का YTM minus the swap rate. That is I spread, Animesh. Okay.
Okay.
कितना है 3 year swap rate Animesh? 1.84.
1.84. Yes,
So 2.707 minus 1.84.
0.4. 2 points. This is right. 7, right? Okay. Wait a minute. 2
So
points.
I think when you said the fixed rate for a swap, is that what you were talking about, Animesh?
Yes, sir. And
Yeah.
sir, this coupon rate confuses me, especially with the I spread. Because first thing you click is with interest, and then interest you click with coupon. So that's what I wanted to get a clarity, like how to not get trapped by that. Very tempting. Like you think about I spread, you think coupon, and you straight away go to 2.25%.
नहीं. ये spread में always remember you are never looking at coupon. You are always looking at YTM spread में. Always looking at YTM, no matter what the spread is. ठीक है?
Sure.
Is this clear, guys? Yes, Rakshit, we will get there. Interpolated spread. How do you find the spread of an illiquid bond? That is interpolated. What is the What is the interpretation of interpolated spread? मतलब the full form. Rakshit is just like there's no reasoning behind it. It's just like that. That's how it is. Like it's your bond YTM minus the fixed swap rate. That is known as interpolated spread. Okay, now last, what do you mean by the Z spread? What do you mean by the Z spread, guys? Many people, Rakshit, I will get there. Just let me complete this. I will get there. What's the purpose for that also? Many people in this get confused in this Z spread. First and foremost, guys, remember one thing. Z spread, how do you calculate Z spread is? Okay? I'll tell you. Yeah. How many years the bond is for? How many years is the bond is for?
3 years, sir.
1, 2, 3. 1, 2, 3. What is the cash flows that you are getting? I'll go up again. What is the cash flow that you are getting?
We get a coupon, right?
2.25.
Yes. 2.25, 2.25 and 102.25.
Yes.
Yes or no, everyone?
Yes, sir.
Okay, I'm just gonna write this down. 2.25, 2.25 and 102.25. Okay? Now, when you are given a YTM, you will divide these numbers by YTM. But when you're asked to find Z spread, what you will do is, I will divide this number by 1. Oh, 1 sec. I will divide this number by 1 plus spot rate of year 1 plus Z spread. Plus Z spread. Okay? Bracket close. Bracket close. Raised to 1. Raised to 1. Can you tell me, can someone tell me what will you divide this number by? 1 plus spot rate of year 2 plus Z spread raised to 2. Is that clear for everyone? Is that clear for everyone?
Yes, sir.
Similarly for this one, what would it be? 1 plus spot rate for year 3 plus Z spread plus Z spread. Okay? Raised to 3. Harshil, let me check. Raised to 3. Now, first and foremost, guys, which is the common number in the denominator? Z spread would be common. Would you agree, yes or no? Z spread would be common. Would you agree, yes or no? Everyone. Yes, perfect. Okay. Now what you will do is, if the price of the bond is 98.7 of its par, do we have the price also given? Do we have the price also given, guys?
No, sir, we have to
No.
calculate, no?
नहीं दे दिया ना 98.7% of par है.
Okay, okay. ठीक है, मैंने
So
calculate किया था.
what is the price? What is the price of the bond, guys? What would be the price of the bond?
98.7.
98.7. 98.7. अभी अपना कैलकुलेटर्स लो, ठीक है? पहला फर्स्ट थिंग ना क्या करो, बीच वाला नंबर ले लो 82 बेसिस पॉइंट. पहले बीच वाला नंबर ले लो 82 बेसिस पॉइंट. ओके, keep 82 basis point as your Z spread. And do you see, are you getting 98.7? Are you getting greater than that? Are you getting less than that? Quickly.
Can you scroll up just to see the spot rate?
Yeah, sorry. This is the spot rate. First, always take the middle number. 82 basis point is how much in percentage terms, guys? 82 basis point is how much in percentage terms? 0.82. Yes or no? I think everyone's busy solving the questions now. Question.
So, like in calci, if you want to calculate what we do?
नहीं, normal you have to just, आपको क्या करोगे आप इसमें 82, you will add 82 basis point here, 0.82 plus
Okay.
0.82 percentage, percentage plus 0.82, and using the new values find the price of the bond. Like you'll have to do it individually only. Are you getting 98.7? You have to figure that out first. Are you getting
Just
98.7?
like the IR thing, right? Just say we have to guess the IR sometimes.
नहीं,
IRR, internal rate of return.
but internal rate of return में you guess this S1 plus Z spread, उसको that is a different thing. What is the, like, normal first you calculate 2.25 divided by 1 plus this raised to 1, 2.25 divided by 1 plus this 1.1 plus 1.260 plus 0.82. Similarly, you do this, add up everything. What is the total present value that you are getting? First, calculate that. 0.899 plus 0.82. So, an easy way what I will tell you is, this is the hack which I used to use. Okay? We have three numbers. First solve the denominator completely. So how do you solve the first denominator is 0.899 plus 0.82. I get 1.7190. उसको percentage में लिखे, उसको I'll divide it by 100 plus 1 bracket close raised to 1. So I will store this number in 1. I'll store this number in 1. Denominator of 1 I'll store. Denominator of 2 I'll store. Denominator of 3 I'll store. Then 2.25 divided by recall 1, and I will store it in 4. 2.25 divided by recall 2, I will store it in 5. And 102.25 divided by recall 3, I will store it in 6. Then recall 4 plus recall 5 plus recall 6. Okay, so it becomes like a pattern. What is the answer that you guys are getting? Animesh, what would be the second denominator? Can you quickly tell me second denominator क्या होगा?
That will be 0.01260 plus this 0.82. So
what is the final value that you're getting?
wait a minute. 1.26 plus 0.82 divided by, that's 2.08 divided by 100 plus 1.0208, and then you square this.
Do good. I wanted to hear this. You square this. I thought you would have forgotten this. Okay.
1.0420.
20. Store it in 2. Similarly, store that in 3. The third denominator. Okay. So are we, Kashvi, are we getting 98.7?
Yes, sir, when we use 0.82.
Let me check. 904 plus 0.82 percentage plus 1 raised to 3. Store 3.
Sir, for cube, if we press y by x is 3 and then I press enter, we'll get the cube value as well, right?
Yeah.
Okay, just I wanted to check for the third one, is it 1.08396?
1.0839. Correct.
Okay.
So answer we get is 98.7. So the correct answer would be 98.7 only, guys. The correct answer would be 82 basis point only. Am I clear?
Yes, sir. Yes, sir.
Suppose, guys, अगर आपको price 98.7 से ज़्यादा आ रहा होता, तो which would be the correct answer? If you guys were getting an answer greater than 98.7.
Yes, sir.
So the correct answer would be
A.
Why A? आपको डिनोमिनेटर को बढ़ाना पड़ेगा कि डिनोमिनेटर को कम करना पड़ेगा? If the answer that you guys were getting would be 100, let's just say it would be 100.
तो अगर
100, then denominator को बढ़ाना पड़ेगा.
से
So
ज़्यादा
the
आएगा.
correct answer would be 87.
87.
Is that clear?
Yes, sir.
This is how you solve for Z spread. Don't waste your time. Just solve the middle one and then ऊपर नीचे देख लो. Is that clear, guys?
Yes.
Is this clear? Are we clear with Z spread?
Yes, sir.
Animesh, Ayushi, Saurav, Harshil, Kashvi.
Yes, sir.
Yes, perfect. Okay. चलो ठीक है. Next, an analyst is analyzing a 6-year callable bond with a semi-annual coupon of 2.5%, trading at a price of 98.9 per 100 par. Okay, match the following yields. Which one is yield to first? First and foremost, tell me, what do you mean by yield to first call, guys? What do you mean by yield to first call?
So the yield of the bond at the first call date.
Yield of the bond at the first. Too good, guys. Too good. You know, I feel like the questions. I thought the questions which might be tricky for you, and you guys are nailing it. Okay. So how do you find yield to first call is? You will draw like when will be? This is a 6-year callable bond with a semi-annual coupon, trading at a price of 98.9. So आपका first call, like what will be when you find YTM on your calculator, you have to use your time value function, that is n I by y PV PMT. N कितना लोगे आप लोग? What will
12.
be n?
8.
12, sir.
Sorry,
12.
why
12.
12? Why 12?
Semi-annual coupon.
हाँ, but first call कितना है?
Acha, 4 to 5. Then it's 10, right?
End of 4th year
And for 8, 8.
कितना होगा फिर?
8.
N would be 8. Is that clear? N would be
8.
8. Okay. You are trying to find I by Y. What would be price? PM. What would be present value? Guys, present value कितना है?
Negative 98.9.
Negative 98.9. Negative 98.9. What is PMT? What will be PMT?
1.25.
1.25.
1.25. 1.25. And FV is 100. What do you get as I by Y?
101.5, no?
Sorry?
FE will be 101.5, no?
So, no, FV is 100.
If we're finding the yield to first
Sorry.
call.
Call price. I'm so sorry. We have reached that stage where you guys are correcting me now. So very well done. Okay. So the answer FE is 101.5. What is what would be your I by Y?
So just wanted to check with you. It's a 6-year callable bond, semi-annual. So there are 12 periods. Now
Correct.
we are finding it for the 4th and 5th year. मतलब 4th year तक 8 coupon payments हो चुके हैं.
Correct.
Hence we have taken N as 8.
Correct.
But we usually take the time remaining, right? Till maturity.
नहीं, आपको स्टार्टिंग से मतलब 4 से 5 इयर्स के बीच में वो बुला सकते हैं आपको कॉल. मतलब अगर ये सपोज एक टाइमलाइन है, ये लेट मी सपोज दिस इज अ टाइमलाइन फॉर 12.
अच्छा, ओके, हाँ समझ गया, ठीक है.
12 कैश फ्लोज मिलेंगे आपको. 4th कैश फ्लो के बाद वो बुला सकते हैं आपका. ठीक है. तो अगर 4th कैश फ्लो में बुला लिया तो कितने प्राइस पे बुलाएंगे? 101.5 पे.
101.5.
आपको 101.5 दे देंगे और बोलेंगे गिव मी माय बॉन्ड बैक. इज दैट क्लियर?
सर ये 8th कैश फ्लो होगा ना, इफ दे आर सेइंग 4 to 5 years.
ये सो 8 कैश फ्लोज. करेक्ट.
हाँ, okay. So if it is, so then we have to assume it as a 4-year paper at a future value of 101.5.
हाँ,
Present
मतलब they
value,
will give 101.5 and call back the bond.
call back the bond, yeah. And the
So
price
what
of
is
a callable bond can never exceed 101.5. Well, if it does, then company will
Yes.
call back.
Correct.
Got it.
Okay, so guys, what is the yield that you guys are getting? What is I by Y that you guys are getting?
1.57, sir. 1.57%.
1.57 है क्या आपने? बट उसको आपको क्या कहना पड़ेगा फिर? मल्टीप्लाई बाय 2 ना?
Oh,
Yeah, semi-annual.
Yield,
3.14.
remember,
YouTube was.
whenever you have to mention yield, it has to always be in annualized terms. So 3.149. So एक ये हो गया. What would be yield to second call? Quickly just change your N, change your FV. N कितना होगा now? N would be 10. N would be 10.
2.92.
2.92. Okay. And
And
what is
YTM and
your
yield to
yield to maturity? Like suppose you are like yield to maturity, like when the bond matures, what is yield to maturity?
2.69.
2.6998. Which is the worst yield? Which is the
YTM.
worst yield?
YTM.
The YTM. That is why yield to worst would also be 2.6998. Is that clear? Is that clear, guys?
Yes.
Everyone.
Yes, sir.
ठीक है? Let's take a quick 5 minutes break, guys. ठीक है? I'll just have some water and come back. आप लोग भी थोड़ा move around कर लो. I think we have only 5 to 6 questions left. Let's resume in 5 minutes, okay?
Yes.
In the meantime, if you guys have any, also in the the readings which we have covered, if you guys have any questions, okay, we're gonna look at it at the end of the session also as well. ठीक है? चलो, see you in 5 minutes.
Yes, sir.
Let us look at the next one. Changes in the required margin for a floater usually comes from where? Shifts in the yield curve, changes in the credit risk, increase or decrease in inflation. Guys, whenever you hear the term floating rate note, always remember, okay, required margin or discount margin will come in your denominator. Quoted margin will come in your numerator. You always remember that first. Okay, I'm going to repeat it again. Whenever you hear the term floating rate note, your numerator will always have MRR plus quoted margin, and your denominator will always have MRR plus discount margin. MRR plus discount margin. Is that clear? Is that clear, guys? Your numerator will always have MRR plus quoted margin. There is no doubt about this one. And your denominator will always have MRR plus your discount margin. Okay? Now, changes in the required margin, changes in this will usually come from where? Okay? Does it come from the yield curve change? Does it come from changes in credit risk, or does it come from increase or decrease in inflation? Everyone's giving the correct answer, but I need, I want a, what do you say? I want a rationale behind it. Vyom, can you tell me the rationale why B? I want you to understand. I want you to tell me what is the rationale behind it. Why B?
सर क्योंकि क्रेडिट रिस्क जब चेंज होगा तो बेसिक या तो रिस्क बढ़ेगा या तो कम होगा, तो इन्वेस्टर्स विल आस्क फॉर मोर रेट ऑफ रिटर्न बेसिकली, जो प्रैक्टिकली अगर मैंने लगाया तो
ठीक है, तो देखो बेसिकली एक्सप्लेनेशन ऐसा है कि जब आप फ्लोटिंग रेट नोट में इन्वेस्ट कर रहे हो ना, so you are already expecting whenever the interest rate or the YTM changes in the market, you will get that only. Is that clear for everyone first? Whenever you are investing in a floating rate note, okay, your rationale is you do not want any interest rate risk. You do not want any interest rate risk. Is that clear for everyone? Whatever the interest rate in the market is, you will get that. Whatever the interest rate in the market is, you will get that. Okay. Now, interest rate in the market is dependent on shifts in the yield curve. It is dependent on increase or decrease in inflation. What is it not dependent on is, like, there's one, like your required margin will change. अगर suppose company की quality खराब हो गई, तब आपका floating rate note effect हो सकता है. Is that clear? Is that clear for everyone? Why B? When I'm going to repeat it again. Whenever you are investing in a floater or a floating rate note, you do not want any interest rate risk. Like whatever the interest rate in the market is, you want that. Okay, but apart from that, there is one risk. There's one risk where your required margin, that is your denominator, might change. Is when there are changes in the credit risk of the when the credit risk only decreases, when your credit risk increases or your credit risk decreases. Is that clear? Is that clear for everyone? The correct answer would be B for this one. Animesh, Rakshit, Ananya, Ayush, Ayushi, Anusha, Harshil, everyone. Are we clear with this question?
Yes.
Floating rate changes in the required margin for a floater.
Sir, just want to ask, so any shift in the yield curve will affect which margin then?
It will not affect anything because yield curve में floating, like आपका quoted margin तो पहले से ही कंपनी डिसाइड करके रखा है, ठीक है? जो अगर yield curve चेंज हो रहा है मतलब MRR आपका चेंज, मार्केट रेफरेंस रेट चेंज हो रहा है.
Okay.
So it does not really affect you if you have invested in a floater.
Okay, I think so. It's because numerator denominator पे दोनों MRR equally.
Correct है. Yes,
Okay.
absolutely correct. Okay.
Got it.
Now, second. Next is money market yields are what? Annualized and compounded, stated for a common periodicity, stated on a simple interest basis. Money market yields. First, you need to define what are money market. What are money market securities, guys? What are money market securities? Now, this is where things start getting very tricky, okay? Money market securities are maturity less than 1 year. Money market securities are maturity less than 1 year. Okay. And what are capital market securities are maturities more than 1 year. Now whenever we were talking about, let's just say, guys, I want to clearly define what do you mean, like what do you mean by a YTM first? Whenever we are talking about a 2-year bond, sorry. And if I state YTM is 10%, what does this exactly mean? Can you guys tell me what does this exactly mean? What do you mean by YTM is 10%? चलो मैं आपको कैश फ्लोज भी देता हूँ इधर. चलो 5 and 5 plus 100. Yes, basically you will make a return of 10% every year on a compounding basis. You will make a return of 10% every year on a compounding basis. Is that clear? Is that clear? Is that clear? Why? What does it mean
Yes,
here?
sir.
Why is YTM? Why do we use YTM? We use YTM to find the present value of future cash flows. Okay? And whatever price that you get, if you invest it at that price, you will make a return of 10% every year on a compounding basis. The only condition is you have to reinvest this at the original YTM. Clear है ना ये पूरा? YTM का, like I want you to understand exactly what is YTM. So you start in a flow. YTM is used to find out present value of future cash flows. YTM बोल दो, required rate of return बोल दो, it's the same thing. Okay? अभी आपको present value of future cash flow मिलने के बाद you get the price. So basically, if you invest in the bond at that price, you will make a return of 10% every year on a compounding basis. Clear है सबको YTM? Is everyone clear what is YTM? Now,
Yes, sir.
in money market securities ना YTM का concept ही नहीं. Okay? मतलब मनी मार्केट में ना yield होता है ना, वो सिंपल एडिशन और सब्ट्रैक्शन होता है. What do you mean by addition or subtraction is, guys, if there's a dress for 50,000, okay, and there's a 10% discount on this dress, what is the price? What would be the price of this dress? What would be the price of this dress? If a dress is for 50,000, there's a 10% discount. What would be the price of this dress? Can you tell me what would be the price of this dress? 50,000 का ड्रेस है, 50,000, the price would be 45,000, yes? The price would be 45,000, yes or no? हमने सिंपल सब्ट्रैक्शन किया इधर, yes or no? हमने सिंपल सब्ट्रैक्शन किया इधर. Suppose there's an item for 25,000. There's an item for 25,000, and it is and you will get a 10. You have to pay a 10% premium for this. So what will be the price that you will have to pay? What will be the price that you will have to pay? 10% premium, 27,500. इधर भी हमने देखो सिर्फ एडिशन किया है, सिंपल एडिशन किया कि नहीं किया है? So money market securities na, they work on simple addition and subtraction. Am I clear? Always make sure you remember this. Money market securities work on simple addition and subtraction. आप subtraction करोगे इसको बोलोगे discount yield. आप addition करोगे इसको बोलेंगे add-on yield. Discount yield and add-on yield clear है सबको? Is everyone clear with what is a discount yield and what is an add-on yield?
Yes, sir.
मनी मार्केट सिक्योरिटी आ गया, आपको बोला गया यील्ड ढूंढने. इफ यू आर टोल्ड टू फाइंड द यील्ड, आपको सिंपल एडिशन और सब्ट्रैक्शन करना है और कुछ भी नहीं करना है, सिंपल एडिशन एंड सब्ट्रैक्शन करना है. इज दैट क्लियर? Come on, I want all the 18 students to give me a yes or a no in the chat box. Okay, Ayush is saying yes. Perfect. Ayush is saying yes. Vyom is saying yes. Whenever you have, I'm going to repeat it for the last time. Whenever you have any money market security, to find the price, you have to simply add or you have to simply subtract. Clear है? Add करोगे तो add-on yield होगा, subtract करोगे तो discount yield होगा. ठीक है? So money market security yields are stated on a simple interest basis. They are stated on a simple interest basis. Is that clear? ठीक है?
Got it, sir.
Now, the stated annual yield to maturity on a semi-annual bond basis is 3.66%. The effective annual yield is closest to what? First and foremost, what do you mean by effective annual yield? What do you mean by effective annual yield? Anyone? What do you mean by effective annual yield?
Sir, I don't know the meaning, but I can give a try on the formula.
Yes, you can try.
So I think so it's 1 plus the yield raised to power the end n by 365 minus 1 is that EAY?
You're almost there. See, guys, remember one thing. Okay? If I give you a bond, मेरे को एक बात बताओ अभी, let me bond 1 year, YTM is 5%. So what is the return that you will make on this bond, guys? What is the return that you will make on this bond? हमने अभी किया था. Everyone, what is the return you will make on this bond? Bond 1 year, YTM is 5%. What is the return that you will make on this bond?
5%.
5%. Simple. You will make a return of 5%. Okay. Now suppose bond 2. Suppose I make this semi-annual. Suppose I make this bond semi-annual, 1 year only. ठीक है? YTM में कितना लूंगा फिर? What will be the YTM change to? Will it change to 2.5%? Yes or no?
Yes, sir.
Will it change to 2.5%? Yes or no?
Yes, sir.
So what will happen is, दो कैश फ्लो मिल रहे हैं आपको, फर्स्ट में 2.5%, कंपाउंड करके 2.5%. Am I going to make the same return now? Am I going to make the same return as bond 1? Am I going to make the same return as bond 1?
No.
You will make a more return.
No, sir. No, sir.
So what is the return you're actually making? उसको बोलेंगे effective annual yield. Is that clear? Is that clear, guys? तो अभी सेमी एनुअल बॉन्ड बेसिस का YTM दिया हुआ है आपको 3.66. तो फॉर्मूला इज 1 plus 3.66% divided by n, that is 2 raised to 2 minus 1. कितना आता है आंसर? What is the answer that you guys are getting? Is it B? Is it B? I want to ask you guys one tricky question. अगर ये annual bond होता, तो effective annual yield कितना होता? I don't want you to calculate and think logically and tell me. It would be the same.
Same, sir.
Understood the logic now? Effective annual yield था. What is the logic? Now, if it would be a quarterly bond, would it be greater than 3.69? If it was a quarterly bond?
Yes, sir.
Because आपका compounding ज़्यादा बार हो रहा है. Is that clear? Your compounding is happening more. Is it clear? Clear है? Okay. Next. A bond issued by RTR pays a quarterly coupon of 3.25%, has 3 years to maturity, and currently trading at 97.28. The semi-annual bond basis yield is closest to what? अभी again, जब भी ना आपको ये term सुनाई देता ना, like semi-annual bond basis yield, you always remember you have to make use of EAY, effective annual yield. You have to make a use of EAY. ठीक है? A bond issued by RTR pays a coupon of 3.25%, has 3 years to maturity, and trading at 97.28. What is the stated YTM of the quarterly bond, guys? What would be the YTM that you would get? Stated YTM. What would be the stated YTM quickly? For the quarterly bond. N कितना लोगे? What would be N? N12.
Well,
Okay. You are finding I by Y. Price कितना लोगे? What would be price? What would be the price?
97.28.
Minus 97.28.
Minus.
What would be PMT?
That will be 3.25 by 4.
3.25 by 4. Correct.
0.8125.
And what would be future value would be 100. What is I by Y that you guys are getting?
1.055. But that you have to multiply by 4. Right? Sorry,
Yeah.
2. Again trick.
No, 4. You multiply by 4 only first.
Okay.
कितना आ रहा है I by Y?
2.22.
Quarterly bond. YTM is कितना दिखा रहा है आपको? 4.22.
Yes.
Now you calculate effectively आप कितना कमा रहे हो ये बॉन्ड में? First calculate your effectively your effective annual yield. What is your effective annual yield? Whenever you have this,
It will be C, right? The effective value will be, if ITM is 4.22, you will need to earn more than that. So the C will be more than your.
नहीं आप पहले first and foremost I will tell you the question. ठीक है, there's a quarterly bond with a YTM of 4.22. The question they are trying to the question they are asking, whenever you have this term semi-annual bond basis yield ना, they are asking you semi-annual bond है, उसका YTM should be question mark. मैं क्वार्टरली बॉन्ड में इन्वेस्ट करूं या सेमी एनुअल बॉन्ड में इन्वेस्ट करूं, my return should be the same. They are asking you what should be the YTM for a semi-annual bond basis yield. So what you would do is, first you will calculate your effective annual yield for a quarterly, and then using that you will find the YTM of semi-annual. Got it, Animesh?
Yes, sir.
So what is the effective annual yield for the quarterly bond, guys? What is the effective annual yield that you are getting for the quarterly bond? Are you guys getting 4.2873 is equal to 1 plus YTM divided by 2 raised to 2 minus 1. Solve करो, YTM निकालो. Solve करो, YTM निकालो. Answer is the correct answer is Harshil is getting C. What about others? Correct answer is C. Is that clear? The correct answer is C. So whenever in any question that you are getting semi-annual bond basis yield, you have to, first thing that comes in your mind is EAY is equal to 1 plus YTM divided by 2 raised to 2 minus 1. They are asking you this. Is that clear? Whenever you have this term semi-annual bond basis yield, it means this. Clear hai sabko? Is this clear for everyone?
Yes, sir.
In any question, whenever you have semi-annual bond basis yield, EAY का formula लिखना and try to understand they are asking you this. Okay? Moving on. A 5-year semi-annual bond has an annual percentage rate of 9%. Converted to a quarterly periodicity, the APR is closest to what? ठीक है. Now, APR भी आएगा ना? You have like whenever you're comparing na semi-annual, quarterly, monthly, हमेशा EAY का formula लिख लो first. EAY is equal to 1 plus YTM divided by N raised to N minus 1. In this formula, what are they asking you? First and foremost, figure out what are they asking you. What are they asking you to find? What are they asking you to find, guys?
APR.
नहीं, APR, but ये formula में क्या लगता है आपको? क्या पूछने की try कर रहे हैं लोग?
YTM.
They are asking you to find the YTM. When N is 4, is that clear? Now to find the YTM, what do you require? What do you require?
EAY, EAY.
EAY is semi-annual bond use करके मिल सकेगा हमें? Yes or no? So find out EAY using 1 plus 9% divided by 2, bracket close, raised to 2 minus 1. What is the EAY that you are getting? What is the EAY that you are getting, guys? What is the EAY that you are getting?
Sir, we have to do line by 2, right? Or
9 by 2. Yes.
so again, this is a percentage, so this will be again divided by 100, right?
Correct, correct.
Plus 1. Okay, and n is 2. We are taking n is 2 here, and then minus 1. Sir, I'm getting 0.092, then 9.20%.
That is your EAY, right?
Yes,
So now you have your EAY.
yes, sir.
Now what do you need to find?
YTM.
When n is?
N will be 10, sir. Here, like, this is 5 years semi-annual. Oh, quarterly.
No.
Okay, okay.
So
So
n
it's
would be
4.
4.
Okay.
Always remember, guys, EAY now, to compare, like I said, to compare an annual with a semi-annual, to compare a semi-annual with a quarterly. Effectively, you will be earning different returns. So how do you compare it? Like, how do I make sure that effectively I'm earning the same return? How do I make sure effectively I'm earning the same return? You will have to use effective annual yield. Okay? Yes, the correct answer is 8.98%. Is that clear?
Yes,
Is
sir.
it clear, guys? आ गया सबको? Has everyone got 8.98?
Yes, sir.
Okay? Even many students get confused with this. Okay, what is the semi-annual bond basis yield? First thing in mind, EAY is equal to 1 plus YTM divided by 2, bracket close, raised to 2 minus 1. They are asking me YTM. Clear? Hai? Semi-annual bond basis yield. They are asking you YTM. Okay, but using this formula, your EAY ka formula. Is that clear? Okay, so I guess we're done with the questions for today. Tomorrow, what we will do is tomorrow we will look at floating rate note. Okay, because we were struggling with those. Tomorrow we look at floating rate note, and we look at modified duration, convexity, effective duration, effective convexity, key rate duration. Is that clear?
Yes, sir.
Okay. So by doing this, majority of your fixed income is done. Okay. And Sai, you had a question. Let me check it. Sai, are you still there? Okay, let me check your question, Sai. An investor purchases a 30-year, 5% annual pay bond at 86.24, sells it in 11 years. Immediately after purchase, interest rates increase by 1%. They remain at that level until maturity, assuming coupons are reinvested. Okay. So, Sai, first and foremost, what you do is, is there any way I can share the question with you guys as well? I'm not sure about it. Let me check. Yeah. Can everyone see the question now? Can everyone see the question now on the screen as well?
Yes, sir.
Okay. Tell me something. Originally, the bond was for how many years?
30.
Originally, 30 years. What is the coupon payment that you're getting?
5.
5. 5. Okay. And finally, you will get 105. What is the price that you paid?
86.24.
86.24. Okay. Now, I just said it. Okay. First and foremost, what is the YTM? What was the YTM when you bought the bond? Can you find that out? Right? What
Yes.
was the YTM that when you bought the bond? Everyone as well. Can you guys find out what was the YTM when you bought the bond? $5.99?
Yeah.
Is it 5.99 only? Yes. Perfect. When did you sell the bond side? After?
11 years.
After, so somewhere here. You sold the bond, correct?
Right.
Okay. Now, after you purchase the bond, what are they saying? YTM has become how much? Just after you purchased it.
It will
Immediately after purchase. Sorry?
it'll be 6.99.
6.9. Okay. Now, what did first, we just discussed it. What is, like, YTM is used to find the price of the bond. Once you get the YTM, what does it also state, Sai?
Could you repeat?
Like, YTM is used to find the price of the bond. अब जब आपको ये YTM आ गया, मिल गया, and suppose आपने ये investment कर दिया 86.24 पे, so what does it also exactly state that every year you will make a return of how much?
5.99%.
On a compounding basis, yes?
Yeah.
Okay. There is one exception. There is one term and condition. You have to reinvest these coupons, okay? At the same YTM. Clear? Eh?
Yes.
Now, we are standing on the 11th year. You have sold a bond here. After 11 years, you have sold it here. तो बीच में जितने भी कूपन्स मिला होगा आपने रीइन्वेस्टमेंट किया होगा, यस और नो?
Yes.
ठीक है. कितने पे रीइन्वेस्टमेंट किया होगा?
At the same rate.
नहीं, the rate has changed ना, but
So 6.99.
instead of 5.99 you have reinvested at what? 6.99. Clear है?
Yeah.
So can you calculate total में आपको कितना पैसे मिले? Like normally you can like on your calculator there is a shortcut method. कितने cash flows है आपके पास? कितने cash flows आपको करना है? How many cash flows have you got?
So 11, right? By the time we
N. So put N as 11.
Right.
Put I by Y as 6.99. 6.99. Put price as 0. Price as 0. PMT as -5. PMT as -5. And compute price as 0. PMT as minus. Compute future value. कितना आ रहा है आपको?
78.876.
ओके, तो आपने रीइन्वेस्टमेंट करके कितना बना लिया आपने? 78.876. करेक्ट है? ठीक है. आपने जितने भी कूपन्स को ना रीइन्वेस्टमेंट करते गए एट दिस रेट एंड फाइनली यू गॉट 78.876. अभी बॉन्ड बेच के also you will get some price for the bond, yes?
Yeah, just one doubt. Why have we taken the payments in a negative sign?
Because you are giving out that pay, मतलब आप पेमेंट दे रहे हो ना रीइन्वेस्टमेंट के लिए.
Oh, okay. Got it.
Got it?
हाँ, right.
ठीक है? And why have we taken PMT as 5? क्योंकि ये 1 2 3 4 5 6 7 8 9 10 11 सब जगह 5 कॉमन फैक्टर है ना, so we can take it as 5.
Okay.
Okay, now bond, after selling the bond also you will get, this was your reinvestment income. There is one more income that you will get by selling the bond. How do you, can you find the price of the bond at which you sold at? What will be N now?
19, right?
N would be 19. What
Oh.
would be I by Y?
6.99.
6.99. Okay, what would be your price you are trying to find? What would be your PMT?
That will be 5.
5. And future value?
So we just got it. We'll use that, right?
What did you get?
अच्छा नहीं 100 ही होगा, right?
100 ही होगा.
हाँ.
कितना आ रहा है प्राइस?
It's 79.416.
79.416. Okay. Now, so total में how much have you got? 78.876 plus 79.416. Yes or no?
Yes.
Okay. This is your total income. This is your total income in how many years?
In 30 years.
Yeah. In 11 years, na?
The first one was reinvestment. हाँ. Right, ma'am.
So 78.876 plus 79.416, 78.876 plus 79.416, that is 158.29. आपने इन्वेस्टमेंट कितने का किया था?
86.24.
They are basically asking you, what is the return you have made every year on a compounding basis? तो मतलब हमें कैलकुलेटर पे क्या ढूंढना पड़ेगा अभी? Can I say I have to find I by Y only on the calculator? Yes or no?
Yes.
तो N कितना लोगे अभी? What would be N?
90.
नहीं 11. ये सब अभी हट गया ना, सब आपने ये सब आपने सबको अजम्पशन में ले लिया. ये आपका इन्वेस्टमेंट है, ये आपका पूरा रिटर्न है. तो हाउ मेनी इयर्स आर देयर नाउ?
11. Right.
11. What is your, you are trying to find I by Y, that is the return you have made on a compounding basis. What is your price?
86.24.
Perfect. What is your PMT?
That'll be 5, right?
नहीं वो तो आपने ऑलरेडी कंसिडर कर लिया ना वो अभी ऑलरेडी इसमें.
PMT, we are finding out the horizon yield here through PMT.
नहीं, PMT will be 0 because अभी आपको पूरा क्लियर आपको पिक्चर मिल गया ना. मैंने इन्वेस्टमेंट किया था 86.24 का, मुझे टोटल आया है 158.29. यस.
हाँ.
तो PMT कितना, बीच में ना आपको कुछ पैसा आया है ना कुछ पैसा आपने दिया है, तो PMT कितना होगा?
Okay, so 0 होगा.
एंड FV कितना होगा?
So FB here would be the final price. So
158.292.
हाँ.
So compute I by Y.
Just a minute. It's 5.6762. So yeah,
So correct answer would be A. Okay.
right. Okay.
Understood the logic?
हाँ, got it.
Everyone else as well. All 8 students. We have Animesh. I'm gonna write these people down. There's a high probability. Ayushi, Animesh, Jishnu, Kashvi, Nakul, Sai, Santosh, Shrishti. Okay. I think there's a high probability you guys have stayed till the end. There's a very high chance that you will clear your level 1 exam. So I'm having high expectations from you. Okay.
Fingers crossed.
Thank you, sir.
Understood this question as well, everyone?
Yes, sir.
So tomorrow, what are we gonna do? Tomorrow, we're gonna get absolute clarity on how do you solve floating rate note questions. Okay, and we're gonna get absolute clarity on your modified duration, convexity, effective duration, effective convexity, key rate duration. Okay, we're gonna focus on that. Is that clear? Chalo. Goodbye, everyone. Take care. Have a lovely day. I shall see you guys tomorrow.
Thank you, sir.
Yeah.
Thank you, sir.
Thank you.